Hi, my friends, it's your boy Manuel back here with you again. Today, I'm going to share with you some important facts, some helpful tips and tricks. We'll be taking a closer look at one or two charts once more, perhaps something about the zones and maybe something about the trend tool as well. As I said, I'm making these videos regularly now, and let's just see what comes. And as I said, questions keep coming up in the chat or to our support team first.
Because questions often arise regarding the optimal trading method, or which specific tool is most effective for our purposes, or similar inquiries. So, I recommend to everyone who starts trading with my strategy, because my strategy is essentially zone trading, and you should only, or rather you should begin with zone trading and master zone trading. If you can handle zone trading, then you can naturally also take care of the trend tool and the intraday tool and so on and so forth, so that you might have one or another strategy for it. Probably no more than 3, I'd say. Or you could say, okay, I'll add the swing trader, and if I have time and I'm always at the computer, I'll also include the scalper. That's more about how much time you have available and how you wish to trade. But the most relaxed form of trading is certainly zone trading. Of course, there's also swing trading, but zone trading is truly the most relaxed form of trading, especially if you're active intraday, and it's also the most accurate method. This means that it's genuinely one of the very best tools available that you can possibly utilize, and this is indeed the strategy. A lot is then built upon this strategy because these zones are liquidity zones. These are actually where volume builds up, where money flows into the market, and where the bears and or rather the buyers and the sellers clash here and simply throw money into the pot until it then breaks out, so to speak.
Well, then, this question should now be considered answered. If you are new to your training, then you should definitely do zone trading. Zone trading is the method where, if you can truly master it well, we achieve a success rate of 80 to 90%. We certainly don't have that with any other tool.
This will be the case because zone trading is simply a perfectly calibrated approach to trading across every market sector, regardless of whether you're trading indices, metals, or futures or commodities, whatever it is you're dealing with. That is truly what everything is aligned to, so to speak, and the most reliable method. Then the question came, what should you all have displayed? Forsne. That's completely up to you. I still recommend keeping it as minimal as possible. You see, my chart is always very sterile, so to speak. You can set alarms where you then store your templates, but the analysis window, or the first one you open or keep open, should be quite clean. I recommend that to you too. It really doesn't help if you've got thousands of things open. I often see people have several tools running simultaneously, and then they don't know, is this the trend tool? Is this the master trader tool? Anyway, so I'm telling you, just set your alarms for the respective things, create templates for them, and when you get an alarm, then go to where you made that template, in that time variant or in that time frame, and then take a closer look at it. So as I said, make sure the chart is quite empty. As you can clearly see here, we have a nice downtrend. The trend line shows us this. We also see that our zones are always forming a lower low. The lower low also predicts this for us. And the reversals are also consistently coming in deeper here. This means that the reversals now moving down into this specific area are essentially always pullback trades. If they were to materialize, you can see that reversal would have worked out. It probably would have been a loss or a break even. That would have been a win as well. And you automatically see we're currently in a downward phase, so to speak. We can also clearly see when the EMA 200, which is the master MA, So the master MA 200 and the EMA 200 If they are positioned below the 200 MA, then we generally have what you might call a bearish trend, or we are more inclined to be short positioned. And you can clearly observe that here on the trend line. We have a nice red trend line here, which means we're in a clear downtrend, and we can, in principle, at least primarily make short trades in the euro US dollar. That's fundamental. You can see from the zones that we're falling, and we keep seeing lower lows, which are indeed coming. And we could potentially say now, okay, we're short, but we're also trading pullbacks with reversals. I haven't shown any of that here, for example. I have my alarms for that. When it comes, I have my template ready.
All right, then we can still ask questions about the arc trend tool, but we'll look at that in a moment. Let's take a look at what, for example, could be traded here in the euro US dollar.
In principle, I always look at the chart in such a way that I tell myself, okay, perhaps I'm looking at a blank chart. So I tell myself, okay, I have a blank chart here and I'm looking at it on a 4-hour time frame. And I generally see where we stand for the day or where we've been recently. That means we formed a high in this area up here. And we are now in principle positioned for a short, so to speak. And we can basically assume that we will approach this area down here. That's fundamentally, if you look at the higher time frame, where might the journey actually go today. You can see it very precisely. We had here, from up here, we came down to this point, then returned to the previous high, and once again into a liquidity. So these are two distinct price zones, liquidity zones. And now in principle, we should come back down to this point. That means you can already clearly see a trend here, even without having to use any specific tools. And then you naturally go down to the smaller time frames. Then you can say, okay, you'll begin by going, because I often get asked the question, how do you start in the morning? Or how do you generally begin to analyze a chart? That's essentially what I always do. I'll take a look at the larger time frame. Where are we actually headed? This means, in principle, you can certainly make long trades here, but then you have to look into the smaller time frame. We are mostly operating in M30, or we are essentially M30 traders. This means we then look precisely in M30 where our zones are, and we enter even smaller on breakouts. But here we can agree that we are primarily looking for short trades. Naturally, long trades are also an option depending on the specific market conditions that present themselves. Should a small long opportunity begin to develop here, for instance, if a zone were to form in this area, and then subsequently another zone were to form, we would then be actively pursuing long positions. We've already done half the work here, but it could theoretically be that we won't make any long-term longs here. So, not back up to this point. It can happen, but it doesn't have to. That means we'd rather look to get back up to here, to this high. And then you go short again. That's how you should do your analyses in principle, and also take a look. That's always good. And then you go down into the smaller time frames. Then I'd say, now I'll have my indicators, my zones displayed then. And then you simply take a moment to observe and analyze where this specific trade might potentially be going, or where its optimal trajectory truly should lead. This is fundamentally also one of the questions that often comes up. What that means is, today I'm primarily addressing the questions that frequently appear in the chat or that we receive through our support channels. And if, of course, you already know, if another low pressure area develops here, okay, sorry, wrong color. We have an area here. If a new zone arrives here, which now enters this particular area, this means a small sideways phase is being established here. So we'll likely just drift around here again, and then we should continue to short. This would be our fundamental direction now. This means we essentially already know where we're heading, and with that, we already have a good success rate regarding what we can say, what might happen. Well, what could potentially happen now, naturally. Even if the EMA 9 breaks through this level right here and we decide to enter a short trade, the price pullback could of course continue to move even further down. This means that we would then be stopped out because our stop loss was positioned right here. And we come back up here and get stopped out. Doesn't that mean the entire situation, our trading setup, is invalidated? I would consider my trading setup invalidated if it breaks above this level and confirms. That means if it comes up here and confirms, because we break this area here.
We're going to conclude this particular section now. It's absolutely vital that you grasp this concept fully.
I suppose that's pretty much understood. What that implies is if he were to come back up here, so it should just consolidate here and then come back up. Whether it's already broken out or not, we'll have another chance to enter. Also in between, right here, you then have to look again. You might potentially have a small peak here. We would have a small sell-off area right here. These are then all the areas where you go into the smaller time frames and then say, okay, I'll take a look at this now in M15. And the M5 then, where something happens. And as you can see, I've drawn my line here, although our zone has formed here in a smaller time frame, which means there's price action here as well. It's naturally not as significant in M5, M15, and in M5. Again here, this area is very important for us. That means if the price comes up to this point, it can then reverse its course. It can turn around in this specific area. And in the ideal case, he turns here and then it goes really short, just like we had it yesterday in the Euro USD. You even have to check the M5, M3, M1 charts to see when a wick might appear, like a specific candle, and then the next candle starts to move down here. That's when I enter. And then I have a great R:R here. Well, and then I can say here, for example, I have no idea. We now have this specific area. We now have an area here where we could place ourselves short. Let's assume for a moment that we would short right here at the top in this particular area. So our initial target, our actual first target, because we can set our stop loss quite tightly here, I'd say, for example, if we were to enter up here, then in this region, let's just say, okay, we would have entered a little bit lower. We would have waited here for a small confirmation, this specific area, so to speak, just like we had it with the euro dollar yesterday, which was in this area up here. Then we say, okay, at 1-to-1 you can break even again, or you wait until 1.5. It's clear, if the CRV quickly goes very far, then you can naturally wait. But you have to sit at the chart. And our first target, our actual target, would be here. That means we would actually have here, where we previously had the entry area, already a 5-to-1. I'm explaining this in such detail now because yesterday we had exactly this situation with the euro versus the dollar. Unfortunately, I got out of the trade and have now deleted the setup. Otherwise, I would have shown it to you. But we had this as live trading yesterday in the group, in the VIP group. That's why, yeah. Okay, so here we have our zone area where we exit coming back out of the zone. Up here from the very top zone. That means from the high here, actually in this case, because we are shorting and we already had a 5-to-1 situation here, our ultimate target, ideally, where could that be? Right down here. If you let it run, if from a certain point you allow your stop loss to move further away, meaning not just a few pips, but really several pips or a wide range. Because if you just look at this here, you see it repeatedly, it comes down, comes up, but then goes further down again. That means it always interrupts this area here in between with its short pullbacks where it catches its breath and recovers. And then if you observe the chart here once more, you'll notice it's forming a sideways phase. That means I'm setting my stop loss now above this particular area because volume is building up here again. If it were to fully spike here, we'd be in a different trend anyway, but this way it won't break to the downside. And so you just keep going further and further down. This means we'd have here until we actually reached our final 31 cav. That would be absolutely fantastic. Of course, even here you don't necessarily have to close your position yet. You can in between take partial profits once or twice if you wish, or you simply work with your stop loss. What's crucial is that you secure your position up here at some specific point, as it's explained in our training videos. That's already precisely regulated by us, or rather we're well aware of that, and therefore then you can truly step by step catch up with your SL and always achieve an excellent CRV. This refers to the trading behavior that we observed yesterday. We also had our setup prepared and placed there. That was quite similar, almost identical to this one. We had our entry area positioned further down, which was not confirmed, and it moved up to the last high point or to the final price zone in this specific case. You see here's an M30 price zone. I've drawn it in here. I've expanded it a bit because you need to consider that if the zone is drawn too small, the wicks might not be included. That's up to you whether you include them or not. It depends on how the chart looks. Here, I'd say it fits exactly as I've drawn it because we have here, in this area still, these wicks that are in here. And then right here, there was a strong sell-off multiple times. What that means is you can clearly see once again that here, it's a potential selling pressure zone where it's likely that many orders are sitting, where capital has flowed back in. And that's how you work your way through the zones. And you always see these M30 zones as you're already accustomed to. They simply hold. And you also always see here whenever such areas appear, like right here, it's a sideways phase that starts up again. And in this sideways phase, it really struggles. This means that for the very first time here, you can see it here too, there were low points. So these areas are always where orders are, where money is pumped in. This means whether they're sellers or buyers, it always depends. You'll see that from the breakout or how it unfolds. And you can see a very strong movement then emerges from this. So what exactly do we have? We get a very strong reaction. Then it pushes back again, goes back into an area and stays in this area, then strongly breaks out again to the previous low where orders are waiting. That's important to understand. So orders are here again, be it limit orders, buy limits, stop limits, whatever, or all sorts of things. So orders are placed here then, and here money flows back into the market. So it bounces off again. This is another area where orders are. You can see that from the wicks. That's why it's so important to understand the candles. And what happens? It comes in, goes back down, stays in this area. Here you see, here's no, you shouldn't close a trade here because, as I said, you don't know where it's going because this is a complete sideways range. Then it comes back up and it gets sold off again. It's a fake out, you could say. Yesterday we were also somewhere in our trade. It was in this range, I believe. It comes up and then another strong sell-off. And that's where we entered yesterday, somewhere. And that's where we hit our 20-to-1 CRV right then. And this is important. This box that I have drawn here, you had this box yesterday, or I showed you this zone inside yesterday. And someone then asked why they don't see this zone. You have to see it yourself. These are exactly the areas you must understand, that the tool here cannot see every zone, but you'll see that then. As I said, in principle you should see that. It's purely a matter of practice. And if you understand the candles, then you know that entry points emerge in this area. And that's why we entered here and rode this entire downward movement a bit. And with this, we had it. You can follow that. We have that in the chat. Right here, we achieved that 20-to-1 CRV. And now it's the same situation again. It's currently in this specific area where it's actively doing something. This means we can either enter a short position if it breaks below this point right here, or it comes back out and we go short here. I don't always draw that in. It's then clear that if I principally indicate a short direction, we only take short trades. That means we wouldn't trade long here. That's what's important. We wouldn't trade long here, but we're leaning short. And this is our second area, our entry area. And this is almost always present in all zone trades or all trading ideas I post. And the same goes for this area. If it lingers here for a long time, you get out and you're stopped out here and you have a loss, or you're stopped out here, you've made a loss. That doesn't mean the trade is lost after the first stop out. Then watch out for a second entry point, because it might have been a retest in an area and you might have set your stop loss too tight. But your stop loss shouldn't be placed just anywhere, because if I enter here and my stop loss is here, I'll never have a good risk-reward ratio. That's a trade I wouldn't take, because the risk-reward wouldn't be right anymore. It's better to lose the first trade here, wait for a retest to come here or here, and enter and have here, as you can see, a tight SL or a smaller SL. Because the area is simply strong, and then I simply have a different R:R. That's what's important. So that should now be quite precisely explained by that. Good. And then there was also a question, a small question regarding the trend tool, because some of you also use the trend tool. Yeah, the trend tool is a very cool tool, so to speak. I've also explained in the videos that it really follows the trend. A trend follower, so to speak, always offers entry points with its signals. Of course, you shouldn't trade all of these signals. That's exactly what I explained in my training video. And you can always see here how clearly the trend channels then indicate precisely when a short momentum is coming. But even here, it's important to have the zones with you, and I personally always do it this way. My trend tool setup is then configured like this, that I have my zones set up here in M30. And down here, for example, you have options like new drawings being synchronized within the layout, or new symbols being globally synchronized. That means if you, so I'll activate this, then everything I draw here in M15 will also be in M30, and everything I draw in M30 will also be here in M15. And you'll see that in a moment. If I now say, okay, I want the zone here, but I don't want it here because it would be in my way, or the indicators that might be in here, or the tools that are in here would be in my way. I don't want them. But I do want my M30 zones right here. Then I just say, okay, I'll just mark this here, and you see you've got it in here too. And that's also super important for the trend tool, because you can then see here where there's an area to enter or where there'd be a resistance zone. That means I wouldn't enter here now.
First of all, the trend canals here are green. When you work with the trend tool, they turn green. Consolidation candles are black. This means these are candles that indicate when many black candles are in a row, like here, a zone is forming. This is a price range where buyers and sellers match again, and so on.
It's always the same principle. You can already see that. And then I can still say, okay, but for me, this low point right here would be an area where I wouldn't want to enter. That means I won't be taking this sell signal, because I have this previous area right here, this low. So I haven't had that here yet, but here, and I would only consider the next sell signal now if it's confirmed below this area. For example, that means it could be this one, but we have to see. Here the low isn't broken, which means the entry area would have been somewhere around here, I'd say, either here or in this area. You always have to account for the path a little. The closing price is clear, it was here, and then a bullish candle came back. That means I certainly won't jump in right away here. But where our entry would have worked well here, it would have been right here, and here we had a second red candle. This means we could have entered right here in this specific area because it had fallen below the previous low here. So this was the area where you would enter your SL with the trend tool. It needs to be a bit tighter, but I've explained all of that in detail, or it needs to be placed differently. This means you can place your SL here, or place your SL here, or place it tightly. It just depends. You yourselves must make that decision, but that also needs to be taken into account. One also has to observe how the trend has progressed previously. Here we've already experienced an extreme correction. This means a significant amount of volume was already divested, so to speak. This means he should now short again for a while until he makes another strong pullback. That's usually how it is. You have a downtrend, then at some point there's a bigger pullback and then it continues. And that's precisely what has happened right here, isn't it? And you should always bear that in mind. And yes, as I've said, if you had entered at this very point, you could have taken a really nice trade. Of course, I would have set my stop loss much tighter here. Where were we? We entered right here. That means I would have placed it above the breakout candle. Here, in this specific instance, above this one. I would have placed it above this signal candle. And yes, we would have, let's say, I probably would have closed it somewhere around here because the consolidation candle reached a 3 to 5. Soon there will be another video for the trend tool. I'll also be doing something with the zones again. The next video might just be a trend tool video where we'll be looking at some charts. Can we look at the Euro cut? Exactly what I forgot to mention. I have here the 200s are inside. One is the 200, one is the 50 MA, that's the orange one here. And one is the 200 EMA, but you can also do that using the H.
To have the trading tool displayed, specifically the manual trading tool, I only have the extension installed here. You can also have it displayed in the same way. In the respective time frame, of course, then either chart bound. So here in the trend tool, you must set this for the chart. Not M30 or anything else, but always current, because the trend tool also operates in the current time frame.
M15, so to speak. This means these two should also be in M15. And you can see, again, I'll just delete the other thing, and you can see nicely again that both these lines are trend following, and the signals also come in line with the trend. As usual, sell signals appear within the green background area. So it's absolutely essential to display the colored background because it truly filters out these false signals. However, you can already see that the weakness only appears here, indicated by a red signal. Then it's briefly back to long again. But in principle, this is where the short period begins. And here, from the second or third signal, I'd say, because both EMAs have already converged, you could have made a really great trade. And if you hadn't tightened your stop loss too aggressively, you would probably have been stopped out somewhere around here in that area or even down here. This means that many more entry opportunities arise with the trend. I'm using the ghosters on M15, but as I mentioned, I also utilize the M30 zones so that they are displayed here for me a bit. Yeah, just take a look at it, just try it out. I also have the trend canals included here. So as I said, we have the trading tool extension in here. What else do we have? I've got the high and the lower low line included, and the trend candles are also in there. And in the trend tour, the separation system is the background. It's really good to see, and this also offers some truly excellent entry points. However, you also need to actively work with this particular tool. But as I mentioned earlier, really familiarize yourselves with the zones once you've perfected zone trading. This will quite easily earn you your entire monthly salary. And this is a very relaxed way to trade because you might only receive a signal perhaps every half hour and then you simply check it. Or rather, the tool provides information that something might come up here now, and then you simply analyze it well. So that was it again from me today, and I wish you all a very nice day. Happy BEPS and be successful, my dears.